Let's start with the big picture. What's your analysis of what we witnessed today?
It was really nothing short of an unbelievable day, Annika. I woke up this morning very early, as most traders do, to see that oil had spiked over 120, almost 125. The futures indicating that we were going to gap down possibly 1,000 points. So to be seeing the green on the screen that we are right now, big sigh of relief. The S&P up 200 points, NASDAQ and the Dow also up about 1.5%. A terrific rally and recovery from where things could have gone very, very bad. And it's all around the comments from President Trump about the duration of this war.
You know, it's so interesting because obviously you point out that it's a big sigh of relief, but when we see this crazy kind of volatility, that's really concerning, isn't it? Doesn't that sort of indicate that nobody really knows what's happening?
Well, markets hate uncertainty, and uncertainty causes volatility. And we saw the VIX, the fear gauge as it's called, cross over a threshold of a 30 handle, which is sort of that where we really start to get concerned today. But we expected that there was going to be some volatility, and there's a fair amount of traders and investors that are actually making money in this market.
And you know, we saw, as you pointed out, we saw this big surge toward the close on an indication from President Trump that the war might be coming to an end. You spoke to CBS News about this. The AP has also confirmed that Trump held a call with Putin. Of course, we don't know the contents of that call, but it seems that market watchers such as yourself hang on every little bit of news out of Washington that could put an end to what we're seeing taking place in the Middle East and in Ukraine.
Well, the market has been a Trump-driven market since he was inaugurated for his second term, whether it's the tariff tantrum, war in Iran, the Ukraine, Venezuela, you name it, the market reacts and does, to your point, Annika, hang on every word that the president says. What's interesting here is we had that interview at around 2 o'clock today with CBS where he said, sort of mysteriously, it looks like we may be done and things are going to come to an end soon. That started the rally and the drop in oil prices, crude chief among them. And then just before we went live, AP confirming that this phone call, rather dramatic phone call between the president and Putin took place. We can only speculate as to what they talked about. My suspicion would be that it might involve releasing some of that Russian sanctioned oil into the ecosystem to bring oil prices down and some equilibrium in that in the oil markets.
Presuming that oil prices remain elevated with all of this uncertainty, though, let's talk in practical terms.
Sure.
If we have $100 oil, for example, what does that mean for New Yorkers? Heating bills, for example, and other energy costs, gas costs. How does that play out practically for residents of the city?
Well, energy costs are, of course, the place that it is most obvious that negative impact. We could see, I filled my car up yesterday and was somewhat flabbergasted by what I saw on the receipt. That's not a good thing. That has knock-on effects, of course, as it relates to trade, tourism, activity at our ports. New York being the economic epicenter of so many things in this country that it would be a myriad of negative effects, which is why I hope that this is not just a flash in the pan. And look, the president knows midterms are coming. Affordability crisis needs to be hit head on for New Yorkers and the rest of the country.
Two questions. Let's start with the Fed, because the Fed had been on this path now of cutting rates. Do you expect that won't happen? Is that because of all the volatility we're seeing stock market-wise?
Well, because war is inflationary by definition. And energy inflation, we were just talking about, tends to hit consumer inflation more dramatically than other types of inflation. We have Jerome Powell with 66 days left to go before he hands over the reins to the new Fed chair. But markets are expecting, unfortunately, Annika, that we are not going to see additional rate cuts this year. I'm not happy about that. That could change, but as of right now, it's status quo expectation.
Okay, last question here then. Do markets tend to recover from these geopolitical events quickly or not, especially when there's no known exit ramp at this point, even though we had those comments from Trump and that alleged meeting between him and Putin?
Yeah, the short version is the S&P has never lost a war. So if you look historically going back to the turn of the century, the chart is up and to the right. The duration of that recovery depends on the nature of the conflict. Because of the level of uncertainty with this one, it's hard for me, or really anybody, which is why you have this volatility, to accurately predict. But the short answer is yes, we could see a swift recovery, particularly if these talks have legs.
Marc LoPresti, CEO and Chief Market Strategist of Market Rebellion. Really appreciate your insight. Thanks for coming in.